£40,000. That's roughly how much a UK bank can ask you to explain before it lets a transaction through. And if you've been told there are 3 magic words you must never say to your bank or it'll freeze your account on the spot, I need you to stop believing that right now because it's not true. And believing it is actually making people more anxious, not less. Stay with me until the end because the real answer is more useful than any fake list of banned phrases, and it could save you from a genuinely stressful moment the next time you move a large sum of money. I'm going to walk you through what UK banks are actually required to do in 2026, why they ask the questions they ask, and the 3 things that genuinely can cause a delay or a freeze, because those things are real. They're just not what the scare videos tell you. Stick around for the 3rd one, because it's the one that catches out completely honest, careful people who've done absolutely nothing wrong. I've spent time going through the actual regulations behind this, the Proceeds of Crime Act, the money laundering regulations, and the payment systems regulators' newer fraud rules. Because there's a lot of content out there telling people that certain words will instantly freeze their account. And none of it holds up once you look at what the law actually says. Banks don't run your sentences through some secret blacklist. They're using judgment, training, and internal risk systems that look at patterns of behavior over time. Here's what actually happens, one thing at a time. The first myth to drop is the idea of banned words at all. There is no phrase that trips a switch and locks your account. When a teller asks where a large deposit came from, that's not a trap. It's a routine step called customer due diligence, and it applies to everyone. It's built into how every UK bank operates, not something triggered by careless wording. So if there's no secret phrase, what actually causes a hold or a freeze? That's where this gets useful. Because there are 3 real things, and understanding them properly means you'll never be caught off guard. The first one, and the one most people never hear about, is a mismatch between what you say and what the transaction pattern shows. Banks don't act on a single sentence. They act on inconsistency. If you tell a teller a transfer is a one-off gift, but the account has sent 5 similar payments to 5 different new payees in the last fortnight, that mismatch is what gets flagged, not the word gift itself. This applies to anyone at any age moving any amount over roughly £5,000 to £10,000, which is where most branches set their own internal cash thresholds. The exact figure isn't fixed by law. It's set bank by bank for practical reasons, mostly how much physical cash a branch can hold on any given day. The action step here is simple. If you're moving a meaningful sum, call ahead. Explain briefly and consistently what it's for, and keep that explanation the same each time you're asked. Consistency is what clears you fast. Almost everyone assumes this only applies to cash. It doesn't. The second real trigger is something called structuring, and this is where genuinely careful, well-meaning people can accidentally raise a flag. Since October 2024, under the payment systems regulators' rules, banks can be held financially liable if a customer is scammed and the bank didn't ask enough questions. That single change is why banks now ask far more about transfers than they did a few years ago. Structuring means deliberately splitting one large transaction into several smaller ones, specifically to duck under a reporting threshold. If you're genuinely doing that to dodge scrutiny, that's the real issue. And it applies to anyone handling an inheritance, a house sale, or a business payout. Typically anything moving in stages over £5,000 or £10,000. But here's the part nobody explains properly. Making 2 separate deposits on 2 separate days for 2 completely unrelated reasons, say banking a gift from your daughter on Monday and paying in savings you'd kept at home on Thursday, is not structuring. It only becomes a problem when the intent is to evade the system. The action step is to just be transparent. If a transaction naturally happens in parts, Say so up front, and there's no penalty at all for a truthful explanation. This next one affected a specific group more than any other, and it's not because banks think they're careless. The third real trigger, and honestly the most important one if you're over 60, is a match with a known scam pattern. Banks have data showing that romance scams, fake tech support calls, your bank called you scams, and cryptocurrency investment fraud disproportionately target older account holders. If you mention any of those specific situations to a teller, even in passing, a bank may reasonably pause a transfer or ask more questions. Not because they doubt you, but because those exact scenarios cause real, measurable losses every single year, and they're trying to catch it before the money's gone. This applies most heavily to anyone over 60 moving a transfer to a new payee, especially overseas or somewhere involving cryptocurrency. The action step, if this happens to you, is to answer plainly. If it genuinely is unrelated to a scam, a house purchase, an investment you researched yourself, say exactly that and provide whatever basic proof you have. An invoice, a letter, a sale agreement. That's almost always all it takes to clear it in minutes, not days. Let me give you a quick picture of how this actually plays out for a real person. Joan is 72 and she's just sold her late husband's car and wants to deposit £8,000 in cash. She's heard all the scare stories. So she walks into the branch nervous, half expecting to be interrogated or turned away. The teller asks where the money's from. Joan says, plainly, it's from selling her husband's car to a private buyer, and she has the handwritten receipt in her bag. That's it. The deposit goes through in about 10 minutes because there was never a script to avoid in the first place. Just an honest, ordinary answer to an honest, ordinary question. This is the one I told you to wait for, because it flips everything the scare content gets backwards. The real risk in 2026 isn't a bank misreading an innocent sentence from you. It's scammers impersonating your bank, HMRC, or even a family member to create urgency and pressure you into moving money fast before you've had time to think. If you ever get a call or a message asking you to transfer money urgently from someone claiming to be your bank, HMRC, or even a relative, hang up and call the organization back directly using a number you already trust. Never one given to you in that call or message. That single habit protects you more than avoiding any word ever could. So here's where this leaves you. There's no secret list of banned phrases. What actually matters is consistency between what you say and what your account shows. Honesty if a transaction naturally happens in stages. And a plain, unhurried answer if a question touches on a known scam pattern. None of that requires guessing the right words. It just requires being straightforward, which is something you already know how to do. If you know someone who's already retired or who's about to move a large sum, a house deposit, an inheritance, savings, send them this today. It could spare them a genuinely stressful, completely unnecessary moment of panic. And if you want more of these straight, no drama explainers on how banking and pension rules actually work in 2026, subscribe. Because there's a lot of misleading content circulating right now, and it's worth having one clear, accurate source you can trust. Stay careful, stay informed, and don't let fear do the thinking for you.